Hey guys, this short little video here is training you on what to do with your personally paid receipts. Whenever we go out and maybe we pay for something on a personal card or through our personal bank account, or maybe you started your business and you had been, prior to opening a business bank account, you had been spending the money through your personal account. We don't want to actually attach that personal account to your business booking. So what we want to do is we want to make entries for those personal receipts. And there's two different ways to do this. You can do all in one lump sum, or you can do it one receipt at a time, whatever feels most comfortable for you, but I'm going to show you either way how that works. Right here I've got the actual chart of accounts. Let's back out just a little bit so you can see where we're going. In the dashboard, you go over to the right to the Quick Connect button and you go to Journal Entry. Inside of the journal entry, I want you to enter the date of the receipt, or if you're grouping them together, a common date for all of them. I would break it either on a month end or around the time frame that maybe you created your business account, the month ending prior to the bank account, your business bank account being established. That would be a good time so you have all of them in prior to that point. There's just, multiple ways that you can pick the date, but if you're doing the simplified version of one receipt at a time, which we'll start with that explanation first, then let's just go with that. So I have a receipt for May 2nd. And inside the journal number, this is just kind of a coding for you. It doesn't really have any specific purpose. This is where if your CPA or tax person does year-end journal entries for you and you're going to put them in or they put them in, they will actually put a coding that they run in their office, followed by usually their initials or their firm name, just so it can trace back to exactly maybe, by viewing it, who established this one. I would suggest something along the lines of, the number is fine, it's the first entry you're making, or the date, you can do that again, but also add your initials to it so that you can reference easily who created this journal entry. Inside of here, I have a receipt for office supplies. So I'm going to type office expenses or supplies, depending on how your chart of accounts is set up. And I'm going to put $15, personally paid. And then I'm going to go against either owner's draws, which is the most common, but the second most common would be owner's investments, because you kind of invested this money into your business. Now, this doesn't mean that you can't take this money back out. You're absolutely allowed to take this money out. But if you have the owner investment account, do use that one instead of the owner's pay and personal expenses, because that is not where this belongs. However, if you have just a standard chart of accounts where it just has owner draws, then you can just put it into owner draws, because that's just a wash account in and out. Then I would go ahead and hit save and new. And let's say I have another receipt for the 4th. Then it's already going to pre-populate, so this runs concurrently. And I'm going to put in meals. This is before I have my bank account, and I took a client to lunch. And make sure in here you actually put their name, because you want to have as much detail as possible. You're already in this transaction. You're already doing this. Adding 2, 3, 4 more words in the description is not going to take that much time. And trust me, you're going to be happy you have this information, because we do, as time goes on, lose track of what exactly it is we're doing or have done in the past. And then I'm going to go to owner's draws again. So here's the deal. Meals, this is booking it to meals and entertainment. So you're getting the expense on the books. And that is the biggest key thing that we are actually having a set of books for, is making sure that all of our business expenses are logged into our business bookkeeping. This puts it there. And because it did not come out of a bank account, it came out of your own personal. That means that you made the investment, you put the money up for the business, but it is actually an expense the business can take. So as you build your owner draws or your owner's investment, then what you can do is that when you take money out, you can actually pull against that money, and it's not taxable. It's not the same as if you just pull money out as a distribution to yourself or owner's pay to yourself. It's not the same because this is not taxable. It had a specific purpose for the business. So let's go ahead and save that. Once we're done with entering our transactions, if you do them together, that's for separate. Let's go back in and let's run one together. So let's go ahead and stick with May 4th, and let's just put in meals. We had $30 for meals. We had office expense of $15. We want to make sure we put the proper, and then let's go against owner draws. So then this is how we would do it if we actually put them all together. You're going to put your expenses out first, and then you're going to credit against your owner draws, because you're saying, look, we spent that money for meals and entertainment. We spent that money for office supplies or office expenses. And we want to give the credit of where that money was spent from back to the owner. So then we save and close. Now here's where we double check our entries. I want you to come in here, and if you have owner's investments, you would type up owner's investments. Otherwise, we put these under owner draws, and we can view the register. We're in the chart of accounts. This shows you the journal entries that we created. And in here, it shows that we increased how much you've invested in your business based on these receipts. And if you open them, edit, it takes you right back to the journal entry. Now we can just X right out of here, and we're still in this screen. And you edit, and it takes you right back to there. So this is the way you do those. If you want to do them in one fell swoop, more than happy to see you work it that way, and your numbers will actually tally down. So you saw that I didn't actually have to type in the $45. It populated that itself. As you continue to enter the debits, we always want to enter the debits first. We want to enter the credits second. As you continue to do that, it will continue to increase that credit amount because it's naturally going to try to offset to zero. So that's where it won't let you finish if it's not to zero. Between the debits and credits, they have to equal. So that's just kind of one of the accounting back-end bits that you don't need to understand because the system kind of keeps that in check for you. But that's why. As long as you enter all your expenses and debits and then you offset it to owner's draws or owner's investments, you will have completed the proper journal entries to put your personally paid receipts on record inside your business books. I hope that helps you. If you have any questions, please feel free to reach out.